Hi, welcome to the Market Alert for Thursday, the 20th of July 2023. So just in case you missed it, which I doubt, yesterday bigger than expected falls in inflation. Latest figures show. What a surprise. No surprise to anybody who follows the Market Alerts. US stocks were choppy as participants digested data, earnings and tech-related headlines. And another day, another short squeeze for stocks. Yield curve yells recession. It's like deja vu all over again. Yeah, we've seen it all before, but they keep ramping the markets to the upside. And as we go into the summer, you're going to see more of this as well, because the markets become thinly traded as bankers go on holes, etc. So it's going to be like this now till September. They'll just keep moving the markets to the upside, barring any sort of black swan event. 1:30 p.m. unemployment claims, that's a weekly one. Then we've got the Philly Fed and existing home sales at 3 p.m. For half an hour into the afternoon cash markets for both the Dow and the S&P. Let's kick off with the Dow, see what its reaction was yesterday. I think there's a pretty good clue in the last headline there, the short squeeze. So let's take a look. So here we go. Yesterday, the market once again ramped up, but didn't hold on the highs. There was some selling around yesterday, and we are overbought. So may get a couple of days where we retest the 5 MA, but we went through the 34922 yesterday, and we have a new high, of course, for today to tackle, which is 35,235. Might as well remove these now, keep it clean. Just in case we have any sort of retracement, let's go from these two green lines to here, and these would be the downside targets. Always cover both sides of the market just in case, so know where the direction of the market, once it's made its direction, you'll know where the targets are, just in case it wants to follow that direction a bit longer. Let's go to the monthly charts because it's a lot clearer. And there you can see that we're just approaching the 78% retracement, which is 35,111. So keep an eye on that level. That's probably why the market stopped yesterday. And just out of curiosity, just remind ourselves that 35,111 was that number, wasn't it? So let's just double check. Yeah, 35,111. So we went through that yesterday in the daily, but we didn't hold it. That's an interesting area. And we're 50 points lower than that at the moment. So yeah, keep an eye on these areas for the Dow. In the German DAX yesterday, similar picture. The market trying to get through 210, but failing there, and also failing at 186 as well. All-time high 16,427, and we're above the 5-bar moving average there as well. But lack of momentum at the moment in the DAX. I need to see that pick up, and also note there's a bit of selling there yesterday as well with the volume, probably due to the fact of what we see here, where the market took off in the pre-market session. We'll look at that in more detail in just a moment in the 5-minute chart. Market trading up to the R2, that's where it ended yesterday, and then the market drifting down, which was unusual given the good news. But then no surprise that a lot of traders would be taking profits. The market bouncing off yesterday's low on the overnight and holding there at the moment, but looking a bit tricky around the 16,200 level. I think that is at the moment. No, 100. That's the 100 level there. So I'm interested to see if the market holds there and we get a retest of the low when the market kicks off at 7 a.m. And speaking of kickoffs, yesterday morning, you can see, and I mentioned that if those numbers came out lower than forecast, which was predictable, then the market would move higher, and it did. But then they decided to sell into it unless the reality and the core inflation numbers, in fact, didn't actually look at the RPI numbers yesterday. No doubt lower as well, which is why the market's reacted. But now I'm intrigued. Let's go and have a look. And the CPI numbers have been downgraded, so they're hidden. There we go, RPI, so not down a lot. The HPI was, but the RPI, wow, not down a lot at all. Maybe that was the reason that we saw the markets move lower than after the first initial rally, because the RPI used to be the benchmark, and then they switched it to this CPI or CPI. So that would probably have something to do with it. But anyway, the market moved lower, found supports, as you can see, at the close of Tuesday. And then we had a bit of a bounce, and then the markets just drifted lower throughout the morning. And into the afternoon, you can see there that we had a bit of a shakeout there just before the news yesterday from the US, and then the markets following the Dow with the short squeeze to the upside, but then drifting lower overnight down to yesterday's low, where the market has been picked up. What a surprise. And we got a bit of a gap there as well, and we came on stream with the full market at 1 a.m. 1:20, and there you can see at the moment sideways in an attempt to try and move the market higher, trying to bounce off that 16,100 level at the moment. So over to the S&P, again continuing to move higher. I mean, taking the previous day's high out has been 1, 2, 3, 4, 5, 6, 7 days now, 7 trading days. No end to getting the S&P up. Where's it going? Well, we've looked at this on lots of occasions, and this is why I keep saying you've got to look at the monthly charts to get a good indication of where the markets are going, and then you can trade in that direction, because this is the one that's got the momentum and the driving force, as you can see there. Also, the weekly charts are useful as well, because you can see there we've only had a couple of weeks where the market's been sideways, but other than that, they keep driving it to the upside. Big move in the S&P there. 30-minute yesterday, well, we had that short squeeze, and then the market struggled a bit, tried to bounce back overnight. So the market's retested yesterday's low. Come off this, what a surprise, get it above the DP and then head to the high of yesterday. FTSE 100 had a great day yesterday, as you would expect, with the BS of the CPI straight through the 89 and the 78 that was causing a problem, along with the 50 EMA. We've got the 200 MA in the way there, and yesterday's high now as well would need to be taken out. Depends whether we got the news to do this, but that's where we are with the FTSE 100. In the 30-minute chart, you can see it was ramped up from the start, and good move yesterday for this market, 170 points in that sort of region, I would have thought that is. In the US dollar yesterday, bit of a bounce, which we can see there, and also a bit of weakness overnight. That's all there is to report really about the US dollar. So let's have a look at the metals, and silver. We'll kick off with silver. So yeah, another good day. Market still moving to the upside there. We need to take out so it's just above the $25. We'll look at that in more detail in a moment, but we need to get back up to $25.50, and you can see there a bit of a choppy session around the news yesterday, but enough to bring the market up again up in Asia. So no doubts they'll retest and bring the market down. Today, when we open for the London fix, and gold also they're moving to the upside yesterday, but an inside bar, unlike silver taking out the Tuesday high. The gold market couldn't do that yesterday, but overnight it's done it, which is interesting. So we've had that bit of a spike up, but it's now being monkey hammered back down. Know thy place. So the central bankers can buy cheaper gold, as they've been accumulating for the last 10 years or so. So in the gold ratio, sideways, 78 to 78 there at the moment. So 78 silver ounce coins to 1 ounce of gold. Okay, that's it for this one. Let's see what the markets have in store today. See if we've got another short squeeze at 2:30. Only time will tell. And with that, thanks for watching. See you in the next one.